Welcome to the Private Practice Survival Guide podcast with your host, Brandon Seigel. I'm a published author, speaker, entrepreneur, and private practice strategist dedicated to transforming the way that healthcare functions. This podcast is all about empowering you to create the change you want to see. Let's dive in. Welcome back to the Private Practice Survival Guide podcast. In today's episode, we're talking about defining your total people expense. Now, I know you're probably thinking this is really simple, like, Brandon, they cost $70,000, blah, 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 blah. But that is one of the barriers, is that you're not understanding how to create a full expense analysis for all of your total people expense. So today, I want to talk about total people expense. I want to discuss why we are defining our total people expense. I want to talk how to define our total people expense. And then I'm going to kind of bridge the gap so you understand how does that relate to our expense to revenue ratio, but also compensation, how employees are seeking more compensation, and kind of this dilemma of, hey, my total people expense is going up by the second, while my revenue is either plateau or it's not increasing in ratio to the expense demand. And so we're going to have future episodes on compensation, but I do want you to understand that sometimes the easiest path traveled creates the most, we'll just say, ponds with alligators in it. Sometimes what we think is easy is actually hard. And I bring that up because a lot of the times our decisions when it comes to valuing financially our people is based on one, what do they want? Like, what do they actually want? And I bring that up because a lot of the time when I say, hey, how did you structure your total people expense for your staff? You're like, well, this is the going rate. This is what they want. I'm trying to make happy employees, etc. But unfortunately, if we don't have the analytics in place, we're actually setting both our people up for failure, but also ourselves up for failure. And we don't understand why we're losing money. And so all of a sudden you're like, Brandon, I don't pay my employees as much as others. How do they do it? I'm like, well, first of all, whenever you have to ask that question, how do they do it? You need to recognize they may have a different business algorithm. They may not need to make the same profit center that you do. They may have other ways of bringing in income. And so a lot of the times we invalidate ourselves, and what's happening is those around us are driving up the cost of people, and we're not holding true to the business algorithm. So when we're talking about our total people expense, a lot of the times we get stuck on just the wages, but the wages only make up a percentage of the total people expense. So when I hire a new employee, I have a new employee coming on board next month. I had a new employee join my team this month. I'm always hiring in a positive way for co-creators. And within that, I have to factor in several costs with that total people expense. I'm looking at, obviously, what is that wage? What are the taxes? What are the insurance? What benefits? And all those things you probably know. But then what are additional things that they're going to cost me? Well, I need a new computer. I need software. I need a new license for the technology. Maybe they're taking business trips with me. Okay, I got to factor that in. And I know that you're going to say, well, Brandon, that business trip, having them come to the conference with you, that's your business expense. That's not your total people expense. I'm like, no, that's my total people expense. At the end of the day, if I didn't have that person, I wouldn't have that expense because I wouldn't be bringing them to the conference. So I am putting that in the bucket of the total people expense. And I know a lot of the time we only look at it through the lens of what they do for us, but we forget to kind of flip the script, so to speak, to understand what are we doing for them. So like everything, there's polarizing forces. There's magnetic, hey, this is a pro, this is a con, this is a benefit, this is not fair. All those different things. You know, even this idea of When I got my first job, I recognized that the first year I was babysat. I was told what to do. I was taught. I was educated. I was given opportunities to underperform, meaning that my standard of operating basis was less than other employees because I was seen as an investment. That investment is part of my total people expense. So if I'm hiring someone that's right out of school and they're going to need that mentorship, they're going to need that supervision, they're going to need maybe additional resources, additional education, additional time that they are being paid to grow and become a tool in your tool belt. Well, all those expenses are part of their total people expense. So I'm going to give one example real quick, just so that you can think with this. Let's, for the sake of today's activity, let's say we're going to hire a marketing director for our private practice. But let's say we're going to get someone that has never been a marketing director. And maybe we're investing in someone that really has great potential, but has never put the product out there before in the way that this role needs. So what we might do is we might say, well, what is the maturity of the value of that role? And work backwards. So if I were to hire someone right now for this role, let's say, and they have 10 years of relevant experience in this type of leadership role, everything, maybe we say this is a $150,000 role for a senior level person. But when we're looking at it, maybe what we're really going to do is we're going to make that role an $85,000 role, and we're going to add another $40,000 in either, hey, you're not going to generate the same amount of product and revenue as a marketing associate when you join our company. We're going to mentor you. We're going to get you some extra certifications. We're going to get you trained up. But all of this is part of that total people expense. And it's critical that we look at that total people expense, not just at our bottom line expense line, but also to that employee. So I state that fact of, hey, I know that you see this role as a $150,000 role, but you're not qualified for that. So I'm still investing $150,000. It's just going to look different. And some of that is going to be investment in you versus in your bottom line, in your pocketbook, in your bank account. And I think that we need to do a better job at being transparent and showing those numbers and showing that with every savings, it can be something we can put back into the company. So even I have employees that like all these different softwares, and I'm like, how often do you use those softwares? They're like, oh, it's nice to have. I go, well, is it so nice to have that you'd rather have it, or would you rather have an extra 150 in your check every month? Because I'm spending it anyway. Some of them say, no, I'd rather have that part of my total people expense. I'd rather have the software. Some people would say, hey, I want that in my wages. And then you have that person that says, I want it in my wages and I want the software, which part of our job is to help others prioritize and understand that you can't have it all. And you have to make tough decisions. And when you can do more with less, you're going to be more successful. So I'm going to give another example, and we'll break down what total people expense includes into greater detail, but I want you to think with it in this way. So I'm going to say I've got several private practices actually that fall into this category. And I'll even use an example of when I owned a physical therapy clinic with my family. We had an orthopedic clinic. And with that orthopedic clinic, there was a point where we had one administrative person to every clinician. That's crazy. Now I operate with like a 1-to-10 ratio, one full-time admin to 10 full-time clinicians. Part of that is technology's evolved over the last 15 years that has allowed me to do that. But one of the important factors that I actually brought to my clinical team that works for me today is I said, hey, every single dollar that I spend on an administrative person is a dollar I can't give you. I only have so much in this total people expense bucket. So let's define the value of the functions. And some of you are like, well, hey, why would I be paying, call it a $50 an hour therapist to do an $18 an hour job? Well, if it's an $18 an hour job, honestly, I can get AI, I can get technology, I can streamline, I can automate. But there is this component also where clinicians reach a certain capacity of what they can see clinically, where they're like, look, my battery is burnt on patient care. So I've reached my capacity. You can either choose to work with me. I'm happy to be here more, but I need some roles that are either revenue generating that are not patient care, or top value added functions that we can justify with my wage goals. And what I have found is even things like scheduling. I've had therapists that say, look, I can do scheduling in literally less time than all these schedulers because I don't give choices. This is what it is. And I'm that good that people will bend over back to get in my schedule. And I'd rather save the $3 a visit on scheduling department and let me just do my own scheduling. I've got it covered. Let me take that on as an hourly increase, because all of a sudden, hey, that's like $6,000 more a year that I'm getting that truly doesn't take me that much time. So part of this is working with your ecosystem to understand where total people expenses are going, having transparent conversations with staff to say, hey, I want to be crystal clear. Your total people expense is not a reflection on how I value you, because I value you more than it. It's a direct reflection on what I can afford. And if we can figure out either how to increase the revenue in this bucket, or we can decipher ways that we can take money out of other pots, let's get creative, because you deserve to reach every goal. And it comes down to, as long as I can afford it and justify it, I want to make it a reality for you, because there is never enough money in this world, in my opinion, to value great actions and great people. And I think sometimes we recognize that we're going to reach a ceiling. And so, how are we able to create an exchange with our people that is beyond transactional, that delivers in abundance, that creates a meaningful impact, that maybe it's not negating our bottom line. Maybe it's not negating our total people expense. Whether it's job flexibility, whether it's autonomy over your schedule, whether it's evolving into the person you want to be and that investment in yourself. Maybe it's something as simple as, hey, I get to bring my kids on site at my clinic because we've got a full daycare built in, or we've got resources available, or we've got playground, or we've got all that. And I look at it and I say, how are we innovating where our total people expense does not become a barrier for us, but becomes an opportunity of communication with our employees? So as we look at breaking down these expenses, I want to define that total people expense is the gross expense connected to all facets related to your people requirements to operate your organization. The easiest way to categorize expenses is what expenses are directly correlated and going up and down with the change of people. So every time you hire a new staff member, what are all the variables that are connected to that person? So again, we've got wages, we've got taxes, we've got benefits, we've got hardware and software, computers, EMR, email, payroll software. We've got compliance, insurance, liability insurance, workers' comp, all the clinical tools that we need. Do we need a new high-low table for that each specific therapist? I'm just giving an example. When we decrease staff, what are the ways that we cut costs as a result? What are those variable expenses? And sometimes there's fixed expenses too that are spread out. But here's the deal. When it's a fixed expense and we add staff, the cost of that expense goes down when we add staff and goes up when we reduce staff. So let's just say that we have a blanketed insurance policy, and that insurance policy is $1,000 a month no matter what. And if I am spreading that over 10 employees, it's a different cost per employee than 20 employees. So I do have to factor that in when I'm looking at my total people expense, because there is a world that when we're adding staff, our fixed expenses are reducing per employee equivalency as a result. So all of that comes into play. So here's a hint. I want you to imagine that your total people expense is equivalent if you were to hire a true independent company contractor to complete that job. So let's just say if I were to hire a marketing company to do all of my marketing, to be that marketing manager, marketing department, everything, their total cost should be equivalent to if I were to hire an employee to get the Adobe suite, the cameras, the social media accounts, the Apple MacBook, all the different assets and stock libraries that they would want, any kind of training they need to upskill their services, all of that. And so we really are looking at this ratio of the total people expense is equivalent to if we were to contract out that entire function, all the tools that they don't rely on anything from you at all. And so that is where we're doing it. And the reason why we're coming up with the total people expense is that we need to be able to be able to know how much of the revenue that total people expense is coming. And that's how we work backwards with compensation. So when we get to compensation, I'm going to be using this word total people expense a lot. And I'm going to say, hey, we get $100 an appointment. We have a budget for all of our people, our entire thing of 60%. Okay, $60 per appointment. How do we break that down for every single employee that's in our company, all their expenses and whatnot? And we're going to come up with that. So if all of a sudden I only have an office manager and I no longer need a scheduler and I no longer need a receptionist or whatever, the benefit of that is by working leaner, we're able to create more affordability for every employee we have. And so that clinician that wants the scribe, wants the assistant, wants the person following them and cleaning up the room and everything, at the end of the day, what I'm saying is you're paying for that in your wages because your affordability goes down as you take on those extra expenses. So how much is it worth to you? And I get asked this all the time, like my conference that I just had in 2025. I built the conference app myself. Everyone's like, Brandon, like you had a team member do it. I'm like, no, I did it. It was easy. I had fun doing it. And I wanted to keep the money in my pocket, plain and simple. Well, just as I may choose to keep the money in my pocket, there are times where I don't want to keep the money in my pocket. Take this podcast, for example. I don't want to do it myself. I would much rather hire professionals that can not only do it better, but my time is worth more than that function for me because it drains my bucket. So that's where we're having those conversations with our clinicians, with our staff, with our administrative. I recently was working with this private practice and they outsourced a lot of different resources, which worked for them. And outsourcing sometimes is a great avenue and sometimes it's not. It depends on who you're outsourcing to and depends on your business algorithm and where you're at. But we kept taking stuff off of the administrative team. And it was so funny was the more that we took stuff off of the administrative team, the more they found new things to complain about and why they needed more people. And so they got into the habit of increasing the total people expense, no matter what. And part of this was the mindset of the team, I'm going to be honest. But the other part was that this practice did not have the systems in place to be able to manage accountability on how functions get done. So in order for us to streamline our total people expense, we have to have clear workflow. We have to have expectations, functions, and also I want to just make it clear, we have to let others be solution finders. So, hey, we get 100 calls a day. Here's 10 different technologies you're going to explore. Show me the best way for us to optimize our efficiency without reducing the quality of what we represent in the community so that it can be a win-win. Let's find solutions. Whenever someone says the only solution is this, they're not looking hard enough. And so I think it's really critical for you to understand there are always solutions, and that's where we prioritize which solution fits the problem to be the most effective and efficient opportunity, so to speak. So when we're looking at our total people expense, I'm a big believer that we have to create visual representation. And so I like to create an infographic for each employee. And that infographic is going to break down everything from base wages to PTO. And I create it with pretty little colors and I break it down where it can be a little overwhelming, but it allows it to be a chart for us to reference. And so I recently did one for a pediatric therapist, an occupational therapist. And I also did one for a child development specialist. And I've done these in different fields. And what I was able to show was, hey, what are your wage value? What is your non-wage expense? And is there anything on that non-wage expense that the employee doesn't value? So let me give you an example. How many of you are doing supervision? A lot of you. And you say, well, we got to do supervision. Well, if they don't value the supervision, you have to think differently. So if I went to your employee right now and I said, look, I can give you $28,000 more in wages because if you don't need supervision, if you can get past this need, and I'm not talking licensure supervision, I'm talking like micromanagement and all these different things. I'm like, if I can reduce the amount of supervision being spent on you, I can put that money in your back pocket. The other thing with benefits is I'm a big believer in there are certain benefits that I like to cash out and it makes sense. So paid time off is a perfect example of an expense that I'm a huge believer that we should give the opportunity for employees to cash it out. And I know I get resistance on this because sometimes you're going to come to me and say, people need their time off, Brandon. It's not right of you to say cash it out. And I say, everyone is different. So you're speaking from the lens of, I want as much time off as possible. I have employees that they really enjoy their job. They really feel that in some years, they're going to work 48, 49, 50 weeks and be happy and would rather cash out some PTO. I'm a big believer in giving the opportunity of choice of that. And sometimes what I'll do is I'll even incentivize it. We'll say, hey, I know that everything has a trade-off. And by you choosing to work more and forfeit in terms of like extra time off, anytime, every quarter you choose, you're able to cash out your PTO and I'll give it to you at 1.25 value because I want to acknowledge that you're not only working, but you're putting in extra resources. And you say, how can I justify that? And I'm going to be honest. When an employee in our business in private practice, if a doctor is not in the office, we're losing revenue. Plain and simple. So we're paying them and we're losing revenue. So if I go to a doctor and I say, look, you're getting, I'm just giving an example, 4 weeks of total time off paid. So you're going to work 48 weeks minimum. But then I'm going to give you an additional 2 of those 4 weeks available as a cash out PTO. So you could work 50 weeks and those 2 weeks that you're working, you're going to get paid to work. Plus you're going to get 80 hours cashed out at 1.25 value. Now you're making more money. You're in a high earning potential. And at the end of the day, it's a win-win. Now, is that a requirement? No. They can still choose to take the time off. I'm not penalizing them. What I'm doing is I'm acknowledging the value of someone forfeiting their actual time off and choosing to work. Those who want to take their work, take the time off. That's why it's there. But not everyone works that way. I know for me, I'm the type of person that I would probably choose to work. And that's me. And you could say, Brandon, that's you as a business owner. I disagree because I'm a W-2 employee and I'm a business owner. I have both aspects of it. From the day I started working at 15 years old, bussing tables, I never had to. I was raised in a way where I had everything I needed, but I learned that my future would revolve on me wanting to work and wanting to grow. And so I chose to work. And that's just a character trait of me. It's not a bad thing if you don't have that, but that's me. And I kind of get frustrated when people think that everything I'm saying is coming from a business owner because I think it's coming from a co-creator mindset. I'm not forcing anyone to do anything, But I want to empower those co-creators who really see like, hey, these are my choices. I can take more time off and make what I make. I can work a little bit more and make a little bit more. Because imagine if I told your employee right now, come work for me. You got 4 weeks off. But if you choose to work 2 weeks out of your PTO, I'm going to give you enough money that you can go to Tahiti for the 2 weeks you're getting paid off. They're like, oh my gosh, 2 weeks off in Tahiti, work 50 weeks. I love what I do. This fills my bucket. Financially, it all pencils out. And my point is, my total people expense balances out with that 1.25 payout because I'm getting extra revenue as a result to offset that 0.25. I'm not making more net from that, but I am acknowledging the effort transactionally to that employee. The other thing in this anatomy that I break down, this whole illustration I create, is in addition to showing the value of all the benefits, showing the value of all that, I also do an expense to revenue ratio. I'm very transparent. Here's the revenue left over, et cetera. And a lot of you, it's so interesting because you're afraid to show the revenue that someone generates. But I've never heard a Google employee complain that it's a multi-billion-dollar business. A lot of Google employees get excited. Why can't they see this as almost like they have shares in the company? What if it was a profit sharing component? So one of the things we do is we do a profit sharing through our 401k for one of our companies, and it's been very, very beneficial. There's no reason to feel defeated or embarrassed by generating revenue. That is the game in terms of our fiscal component. It's not the purpose of the business, as I said, but it's the fuel. So to show we're fuel efficient should be a positive thing. The other thing we break down in this visual representation is average billable hours per week for this clinician, what that billable wage is, what the indirect wage is, what the global wage they're doing, and then what the total people expense of the revenue is and how that compares. Revenue dollar value versus expense value and showing that component. And this allows for a conversation. And I guess my question is if you go to an employee and you say, do you want to work for nothing? I don't know anyone that would say yes. So do you expect the company to work for nothing? Plain and simple. And if they say yes, it's not a fit. That culture, that mindset's not fit. So here's the deal. We're partners. Part of this agreement is we're partners. You need to feel what you're doing creates the abundance of exchange that you're looking for. And the company needs the same. Just as you don't want to work for free, neither does the company. And if you don't think that's fair, then you're in the wrong company. And I think that you might be better served in a nonprofit or a different sector of business. So as a reminder, some of you have heard this, seen this, felt this, but I want to give you, again, some important KPIs around this people expense. We want our net profit to be minimum 15%, 20% target, 25% is our reach goal. We need, in order to reach that 15, 20, 25, we do not have the capability to exceed 60% of revenue going to your total people expense. That is our max budget. So a lot of you are missing out on how to do this. And what you're doing is you're looking at the wage, but you're not looking at the billable equivalency. And I want to just make you understand. You say, hey, Brandon, I'm paying an employee $30 for every hour worked. And they generate $100 an hour. But they're not generating $100 an hour for every $30 hour. It's not 30%. Maybe they're only generating one revenue hour for every 2 hours worked, which means that they're generating $100 for $60 of actual expense, not including all those additional expenses. If that was the case, you would be out of ratio. And so if you're struggling with any of this, please know we've got solutions in place to help you. But I think it's really critical that you break down, and you can start with something as simple as this. Are you ready? Get all of your total people expense for 2024. I want you to break it down in terms of wages, all the expenses, let's call it $1 million, and then all the revenue generated as a result in cash. And then divide it to see what the percentage of that was. A lot of you hire people thinking you're only paying them 30% of the revenue generating, and you're calculating it wrong, is my point. When we're calculating this, we have to calculate the cost per revenue hour. So all of that total time divided how much revenue hours were that is going to give you the actual cost per revenue hour delivered or billable hour delivered. The other thing to think about is that within that 60%, that's admin, that's doctors, that's clinicians, that's everyone. So when we break that down, normally we're somewhere between 45 to 50% is what I call practitioner total people expense, doctors, clinicians, nurses, etc. 10 to 15% is admin. Obviously, if you can get that admin lower, you have more opportunity to give the practitioner that piece. So if you sometimes what's going to happen is you're going to have a doctor that's taking more revenue, but you're making it up with margin on that nurse practitioner or other things. So then you have to think about that when you're looking at the total blended total people expense to revenue ratio. So I think one of the things that's really important to talk about is how do we communicate total people expense with an employee? How do we talk money with an employee? And I think this is one of the deficits of companies today is it's kind of like not okay to talk money with an employee or putting them on the spot or making them uncomfortable. And I think we have to have more open dialogue. So typically my conversation goes something like this. Hey, Jason, I really want to set up a time where I can show you all the numbers so that you can better understand the expense connected to you as an employee so that we can game plan so that you continue to have greater earning potential in the coming year. I want to continue to invest in our relationship. I want you to know that I value everything you do. And the reason why we're having this meeting is because by us coming together to understand the affordability side of things, we can come up with strategies so that your needs are fit, your wants are met, your desires are in reach, and that together we're co-creating on this. And so I look at it as an analysis, and I'll use the analogy, here's the deal. We're a vehicle of change. We need fuel so that you can get where you want to get. And the more fuel that we can create together, the more you're going to be able to put in your bank account. So let's meet, let's talk, let's crunch numbers, let's look at things. So, hey, Brandon, I don't need my health benefits. Can we look at what that is? And so even with benefits, I like to create a bucket where, again, there's some legal things you have to look at. So don't take this out of context. But there is a world where you say, here are 25 different benefits. We've got $25,000 allotted to your benefits per year, and you can pick which benefits you want, or you can put that back into wages that's going to be taxed. That can include 401k. Again, you need to look at all the legal side of things because there are things we can and can't do from a labor law depending on where you're at, et cetera. So consult with an HR attorney, consult with a benefit specialist, consult with your CPA. But looking at that component, so one of the things I have is if you don't need the health benefits through us and you elect to forego it, we have a $2 health benefit increase to your wage order. So you're going to get $2 to your wages every hour as a result of that. Now, if you ever need those health benefits, that's great. We'll take that $2 and put it into the health benefits. And now you get to pick and choose the way that your total people expense is derived so that we can put this to opportunity. So, hey, even something as simple as computers. We have 3 tiers of computers. We have a $500 computer, a $1,000 computer, and a $2,000 computer. You get a new computer every 3 years. You get to choose if you want to spend all $2,000 or put it into something else. Something as simple as that. It's a way and an opportunity to provide collaboration, connection, communication around expenses to create the most meaningful exchange possible, acknowledging affordability, but alignment with value. So today, we talked about defining your total people expense. We talked about some of the expenses that are included in the TPE, the total people expense. We talked about some of those ratios that we want to look at. And then we discovered how to communicate an open dialogue about an employee's total people expense and crafting solutions for affordability while showing value to your employee. So here's a statistic I want you to keep in mind. According to Paycor, the most important factors applicants are looking for when considering a new job are 23% of job seekers are looking for better payer benefits, better employee benefits. 15% are looking for flexible schedule. 14% are looking for career growth. I know that doesn't shock you, but there is this opportunity where sometimes we're leaving money on the table because we're wasting money that's not meaningful to an employee. So an employee comes in and says, I'm looking for this much, and we're not showing them all of the buckets they get in value. We're just showing them a wage order. And I think we're doing a disservice to ourselves and we're doing a disservice to our team. So let's bring transparency to the table. And as we wrap up, I want to leave you with this quote. A well-planned budget is a roadmap to business growth and profitability. Again, a well-planned budget is a roadmap to business growth and profitability. And that was from Warren Buffett. Thank you so much for tuning in to this episode of the Private Practice Survival Guide podcast. Don't forget to like us and subscribe. Watch us on YouTube. Listen to us anywhere where podcasts are played. And share us, comment, and be part of our social ecosystem. Thanks again, and looking forward to connecting with you next, being part of the Private Practice Survival Guide podcast. Thank you for tuning in to the Private Practice Survival Guide podcast. I'm incredibly grateful to each and every one of you. Exciting news. We're now available everywhere, from Spotify to Apple Podcasts to YouTube or anywhere you like to listen to your podcasts. So watch, listen, and reach out. If you loved this episode, please drop a 5-star review. It truly means the world to me. Are you looking for more ways to elevate your practice? If so, now is your chance. Reach out, go to my website, or email me at brandon@wellnessworksmp.com. And remember, it's not just about surviving, it's about thriving.